Most people assume their health coverage is locked in until the divorce is final. They picture signing papers, splitting assets, then moving on. Insurance stays uninterrupted, benefits remain the same. But the truth is far more precarious. Miss a single deadline or overlook one clause, and you could find yourself scrambling for coverage, facing sky-high premiums, or worse, sitting with a stack of medical bills you can't pay. In the next few minutes, we're going to walk through 7 critical steps you must take before your divorce decree is filed. We'll start with your employer-sponsored plan, move on to COBRA and private market alternatives, and even cover life and disability insurance tweaks that most people forget until it's too late. By the end, you'll have a clear, actionable checklist that ensures your healthcare, insurance, and benefits stay rock solid. No surprises, no gaps, no panic. If you're in the middle of marital negotiations or waiting for papers to be finalized, pause everything else and pay attention. Because when that judge's signature lands, health coverage doesn't automatically follow you through the door. Let's lock in your protection now, before the ink dries. Your first stop is your current health plan at work, because once your marital status changes, so can your coverage. Don't assume divorce equals automatic continuation. Log into your HR portal or grab your benefits summary and look for any language about qualified status change or loss of dependent eligibility. Note the exact deadline you have to inform HR. Often just 30 days from the date papers are filed. Miss that window, and you forfeit your right to convert or extend coverage. While you're there, check whether your spouse's information remains on your policy or vice versa, and confirm premiums, deductibles, and copay amounts. If your policy charges more for single coverage, you'll need to budget for that jump. Finally, ask HR if your plan offers any domestic partner or spousal carve-out riders. Sometimes you can secure temporary protection while you arrange COBRA or an individual plan. Taking these steps now means you won't wake up uninsured after the decree is signed. Once your divorce triggers a loss of coverage, COBRA becomes your lifeline, but only if you act fast. You get a 60-day window from the date your employer is notified to elect COBRA, and that clock starts ticking the moment divorce papers are filed. Skip that deadline and you lose the right forever. Even more urgent, COBRA premiums aren't subsidized. You'll be paying the full cost, often doubling or tripling what you paid as part of a group plan. That sticker shock can sting, but it's still cheaper than going uninsured. Before you commit, call your benefits administrator to confirm the exact election deadline and request a COBRA cost worksheet. Then, carve out room in your budget for those premiums and factor in potential increases if your ex's employer changes rates. Remember, COBRA coverage can last up to 36 months for divorces, but premiums can rise each year. Finally, don't wait until the last week to sign up. Send your election form via certified mail or secure digital submission the moment you have the paperwork in hand. That way you avoid processing delays, and you lock in continuous coverage until you transition to a marketplace or private plan. Because when it comes to health insurance, a missed deadline isn't just an administrative headache, it can cost you your well-being. Finally, lock in your rates while you still qualify for group pricing. Individual policies outside work often carry higher premiums and limited benefits. By acting now, you protect your future self from both medical crises and the financial storm that follows. Because in the chaos of divorce, one severe illness or injury could otherwise leave you scrambling, and that's a risk you simply can't afford to take. Your retirement savings aren't the only funds tied to your health. Flexible spending accounts and health savings accounts can vanish or change status once your divorce is final, unless you act now. FSAs are use it or lose it by plan year's end. If you've been sitting on $2,000 in an FSA, that money could evaporate the moment your status changes. Schedule any eligible medical expenses, prescriptions, copays, even that root canal, before the decree is signed. HSAs are more forgiving, rolling over year after year, but the account is usually tied to the person who contributed. If you've been splitting deposits with your spouse, confirm who the custodian is and update the title to your name alone. That way, you'll maintain full control and can keep making pre-tax contributions. If you're under 55, you can still move HSA funds into an IRA if you need liquidity. But once the divorce is filed, rules tighten and you risk penalties or forfeiture. Log into your benefits portal today to check balances, deadlines, and rollover options. Call your plan administrator and ask for the exact cutoff dates. Then, schedule any last-minute expenses and process the paperwork to retitle your HSA. Because losing these accounts isn't just a minor setback, It's throwing away money you've already earned. And now that you've secured your health accounts, there's one final piece to lock in before the final hearing. Before your divorce is final, make sure your medical and end-of-life decisions remain in trusted hands. If your spouse is currently named as your healthcare proxy or executor in your will, those roles may carry over unless you formally update them. That means if you're unconscious or incapacitated, medical staff could be legally bound to follow your ex's instructions. Even if you'd rather have a different loved one or professional make those calls, log into your state's advanced directive portal or grab the forms from your attorney today. Sign a new healthcare power of attorney naming someone you trust, whether that's a family member, close friend, or professional fiduciary, and execute a fresh living will outlining your wishes on life-sustaining treatment. Don't forget HIPAA authorizations. Without them, your doctors can legally withhold your records from anyone not named in your new document, creating delays or conflicts at the worst possible moment. At the same time, revisit your will and any testamentary trusts. Confirm the executor, trustees, and beneficiaries are still the people you intend. If you've been funding a spouse's trust, you may need to reallocate those assets to children, charities, or new accounts. Once the decree is signed, courts often treat existing documents as irrevocable. So delaying this step risks cementing your ex in roles you're desperate to remove. Updating these directives now ensures that, no matter what medical crisis or life change comes next, the people you want overseeing your care and legacy are legally empowered to do so. And that kind of certainty is priceless when everything else feels up in the air. You've just seen how easily your most critical protections, health coverage, life and disability benefits, retirement-linked accounts, and even your say in medical decisions, can slip away the moment your divorce is final. It's not enough to focus on splitting assets and custody. Securing your future means acting now, before the decree lands. Review your employer plan, lock in COBRA or marketplace coverage, update insurance beneficiaries, spend down FSAs and retitle HSAs, and rewrite your healthcare powers of attorney and will. Missing a deadline or overlooking a single clause could leave you uninsured, underinsured, or without anyone to speak for you in a medical emergency. But by taking these 7 steps today, you ensure that your benefits stay solid. No gaps, no surprises, and no regrets. Which of these actions will you tackle first? Share your plan in the comments below. Your insight might save someone else from a crisis they never saw coming. And if you haven't subscribed yet, hit that button now so you won't miss our next deep dive on protecting your future through life's toughest transitions. Thanks for watching, stay vigilant, and remember, securing your benefits before your divorce is not just savvy. It's essential to protecting the life you're about to rebuild.